Well, on Wall Street today, stocks got off to a strong start, driven by a major corporate acquisition by the most closely watched investor of them all, Warren Buffett. Buffett's Berkshire Hathaway reached a deal to acquire the aerospace supplier Precision Castparts for $37 billion. It's Berkshire's biggest deal ever. Precision Castparts should be a familiar name to you if you watched the program on Friday. It was a pick by our Market Monitor guest. And today on the Deal News, Precision Castparts spiked 19%, or sparked. Class A shares of Berkshire, well, they fell just a little bit, as you see there. And this deal seems to be emblematic of what's widely known as the Buffett way.
Even for Warren Buffett, this is big. What's more, the deal to buy Precision Castparts, valued at more than $37 billion, also keeps Berkshire Hathaway moving beyond its original base in the insurance business. In 2010, Buffett landed Burlington Northern Santa Fe Railroad in what is now his second biggest deal for about $26 billion. In 2013, he bought half of the ketchup maker Heinz for about $12 billion. This year, Heinz merged with Kraft to form the world's fifth largest food and beverage company. But Buffett admits his, quote, big game hunting is on hold now for a while.
This takes us out of the market for an elephant, but we'll probably be buying a few small things in the next 6 months.
The move to buy Precision is a big bet on the aerospace companies that buy its parts. Demand for commercial jets made by the likes of Boeing and Airbus is booming. Precision's other big customers buy pipes and pipeline parts. That's the part of the business that's been hurting as oil prices slump. Profit was down 17% in Precision's latest quarter, and its stock price is down 20% in a year. But that's precisely the kind of weakness Buffett likes to feast on, especially if beneath the numbers lies a solid, well-run business he can hold on to.
We're going to be in this business for 100 years, so it doesn't really make any difference what oil and gas does in the next year in terms of us buying it. If somebody told me for sure that the oil and gas business was going to be in the doldrums, we'll say for, 3 years, I still would have made the deal.
Buffett likes to remind people that Berkshire owns 9.5 companies so large they'd be in the Fortune 500 if they were on their own. Precision, with annual hauls of $10 billion in sales and $1.5 billion in profit, would add one more. And there's room for Berkshire to continue expanding. Berkshire recently reported a $67 billion cash reserve. Buffett says he'll use about $23 billion of that in this deal, borrow about $10 billion to finance it. That will leave him with more than $40 billion on hand, just in case he wants to pounce on a deal only he could consider small.